welcome back, everyone, to another episode of Insightful Principles. Today on the show, I actually have a special guest here, Lindsey, and he is very knowledgeable, as a syndicator. He's actually a real estate investor, and he has a lot of great experiences that he's just going to share throughout the show today and really just talk about some of the things that he's learned within the syndication world. He's been able to get into the multifamily space and specializes more in workforce housing and really looking at more of the markets that are more within the Sun Belt, the Midwest, and the Kansas area. So I'm very excited to get this conversation started with you, Eric. But welcome to the show. I'm glad that you're here today.
All right, Kevin. Well, hey, I'm looking forward to it. I appreciate you for having me on today, and looking forward to provide you and your listener base a little bit of value.
I appreciate that, Eric. And I did also forget to mention that Eric is also a podcaster as well. He has his own podcast, which we'll also discuss that throughout this episode. I believe it's called Moonlight. Is that the name of how can people actually look it up online?
So if they want to go and take a look at the Moonlight Real Estate Side Hustle and Syndication show, you should be able to pull everything up from there.
Okay, perfect. Well, to get things started here, Eric, can you just kind of share some of your background and experiences for those that may be listening and learning about you for the first time?
Yeah, that'd be my pleasure. So based out of Kansas City, Missouri here. So born and raised in the Midwest. Love the area. Not too fond of the weather, but it's home. And my real estate journey, it started maybe about 5 to 6 years ago. And what kind of led to it was a little instability within my W-2. So as of right now, I still had W-2 income. I'm looking to replace that and go full-time real estate investing eventually, but building up my passive portfolio and income in the process of that. But maybe about 5 to 6 years ago, I hit a little bit of instability within my W-2, and it really kind of shook me. And what I realized was the dream job in which I finally attained, it wasn't too secure. And so I found myself hitting a place to where I thought that I was going to be able to achieve financial security through job and having a job, but just got into a bunch of politics at work and things like that. And so I figured out that, hey, it's not job security that I needed. It was financial security. And so that set me off on a path that, looking into businesses and looking into investments and things that can secure my family. And I soon stumbled into real estate. And so start doing a bunch of education, listening to a ton of podcasts, Bigger Pockets, and went down rabbit hole after rabbit hole with that. And I knew that I needed to lock in and get laser focused on one niche. And I made the decision I was going to just go 100% into wholesaling real estate, wholesaling single family homes. And so I just locked in 100% on that. And from there, I started focusing on wholesaling. And as I was going down that avenue, I also stumbled into a mobile home park investing podcast and started listening to that. And it was pretty intriguing. The podcast host, he was a syndicator, and he was incentivizing his listener base to locate a mobile home park for him. And if we were, as his listener base, if we were able to locate a mobile home park for him, then he would include us within the deal or either pay us out a referral fee. So long story short, I was able to get direct to seller on a 600 space mobile home, 600 plus space mobile home park in Iowa. And so for about 6 hours of work of deal sourcing and connecting the buyer and the seller together, I was paid out $125,000. So that put me on the path that I'm on as of today, and started building businesses from there, built a wholesaling business, and eventually realized that wholesaling was just another job. And I knew that I wanted to create passive income. And so in order to achieve passive income within real estate, you actually got to be a real estate owner rather than so transactional, in which wholesaling and flipping and things like that is more of a transactional business and not so much a passive income that will come in. And so I ended up buying a mobile home park, and that led me to syndications, because when you're buying real estate on your own, you will soon run out of money or come to an end of your money. And that's where syndications come in, where you can pull resources and pull individuals from various different places. They can all put money in together, and you can continue to do deal after deal and accrue equity and also accrue passive income along the way. And so that's where I am today. And so currently I have right at 111 units under management.
Yeah, that's solid. And I love how you said, you realize with your job, it wasn't so much job security. You really need the financial security, and really thinking of ways of how getting started in wholesaling, which allows you to build that foundation and that base, and then was eventually able to progress and get into more of like mobile home parks with syndications. And I want to get kind of some of your initial thoughts. What were some of the driving factors of why you wanted to start in wholesaling, and then kind of make that progression into the multifamily space with mobile home parks?
So what stood out most amongst wholesaling is, first off, it gives you all of the key building blocks that you need to get into any form of real estate. And so within wholesaling, you're going to have to be really resourceful, which is a great idea in any business, to try to take that bootstrap mentality, enter in with as little amount of expenses as you possibly can, and build out from there. It also is sales. So you're forced to sell, you're forced to network, you're forced to source deals. And so it offered so many different aspects of real estate. And then also, I just didn't have a ton of capital to plow into buying real estate and buying houses or buying apartments or mobile home parks. So it was probably the cheapest way to get in to real estate investing. And so that led me down to the path that I realized that I needed to be an owner of some of this real estate. I started doing really high volumes of wholesale transactions. So as of today, I probably completed over 200 wholesale transactions as of today. And so that's given a lot of equity away within these deals. And I got really connected within the investment world, and people realized that I was really good at what I did as a wholesaler. But the lights started coming on for me that I was giving away a ton of equity for these minimal fees, and it was just a transactional business.
And I do get what you're saying. I think it gets to the point where, like you said, not trying to be so much transactional, but finding ways to actually own and pull resources, build those relationships. And I think that's a lot of what real estate is about, is being able to maintain those relationships and being able to utilize your resources, whether people are utilizing their time, their capital, it may be some knowledge of expertise that they have. And I think that's really how syndications work. Everyone can have a role in the deal. And I'm intrigued to know, what were kind of some of your general interests of wanting to get into mobile home parks? Because I know with syndications, you can do apartment buildings, you can do things that may be more in the retail or the commercial space. What was it more about mobile home parks where you was like, this is something where I want to get started in with syndications?
So mobile home parks was something that kind of fell into my lap. I didn't really go looking for that, but since I stumbled into the niche, I created a skill set on accident. And so I just wanted to really capitalize on what I discovered along the way. And so it would not be too intelligent to get a skill set and just kind of throw it out the window. So Since I already knew about the mobile home park industry and how they operate and what kind of great deals they actually are, and how passive they could become, I want to continue to go down that road and begin to scale, because mobile home parks it's a great scalable asset class. And once you convert the tenants from park owned homes, in which the landlord actually owns the homes, once you can convert those tenants over to tenant owned homes, it becomes almost like a parking lot that you just manage the ground, and you don't have any tenants or toilets or termites to have to deal with. You're just managing the land, and you collect rent for those that are parked on your land.
Yeah, that's pretty cool, to think about that aspect of, like you said, owning, more of the land, and the people that are actually tenants that have their mobile home parks on the land. It's another way to have ownership as well. And I know that you kind of mentioned how, for you still are working a 9 to 5. And I think even for myself, being in the financial planning space, I'm working for a company as well. And I think it's great hearing your story as far as thinking of those additional ways to make income and not being just comfortable with one source of income. Can you kind of talk about that element of just being able to balance, working the 9 to 5, and then also really putting in the extra time outside of work to really build wealth through real estate?
Yeah, so it's a grind, to be completely transparent with you. So I've got a family. I'm involved in church. Building a business. It's a ton of time. It's a ton of work. But most entrepreneurs that have made it anywhere, they typically started their business as a side hustle, or they was doing something like W-2 income, and they was working on another hobby or a business on the side. And that's how they were able to build it up enough to either leave their job or even just have an extra stream of income. But just being completely truthful with you, it's a lot of hard work. So I get up extremely early in the morning to be able to accomplish what I accomplish. And, I go to bed pretty early, and in order to make sure that I'm able to tend to each area of my life. So I want to make sure that my W-2, I'm doing a great job there, and I'm able to spend adequate amounts of time with the family, and also build my business and give the adequate amount of time there.
Yeah, it's important. And I definitely think, like what you said, getting up early, going to sleep early, that's one thing that I've seen that has helped me out a lot. And just really just journaling, having an idea of time, proper time management, and the things that you need to do before work and after work, but also making sure, like you said, when you have a family, making the time for them is necessary as well. But I did want to just kind of get your thoughts on just kind of the business model of Moonlight Equities. One thing that I really enjoy seeing when I was kind of looking at your website is just from some of our previous conversations, a lot of your day work that you do for the company that you work for is a lot of construction, landscaping, and I realized that a lot of those different elements are within the business model of Moonlight. And I wanted to get kind of just your thought process on how you really thought about creating these areas of property management, of construction, landscaping, infrastructure. It's just a very good cohesive elements of all of these different essential areas when it comes to running a real estate business like you're doing. What was kind of some of your thought process when you were kind of creating your business model and wanting to intertwine what you do as work, and also making sure that that's implemented within inside of your business as well?
Yeah, great question, Kevin. To be honest with you again, I think it was more or less dumb luck for me. I just happened to fall into the construction trade. And, initially what motivated me to get into construction was it was a higher paying hourly rate. The downside was that it was somewhat seasonal and you had to prepare for those down months. But with that being said, with it being construction and real estate investing, it goes hand in hand. It correlates. Whenever you're going to buy anything real estate, for the model that Moonlight Equities that we execute is value add. So with value add, you want to go in, you want to make some renovations, you want to drive the appreciation through being able to increase the NOI, the net operating income. And that's being accomplished through a few different ways. You can go in, take regular units and update them, bring them up to a more updated version, add some countertops, add some better flooring, put some paint in there, do some exterior renovations, landscaping. Those kind of renovations, they go hand in hand with the construction field. And so I just happen to fall into it, and I just try to capitalize on the opportunities that I get. And I think any wise person, you would just look at the skill set that you have, see what you are able to transfer and apply into whatever industry that you're looking to go in, and really capitalize on the knowledge that you already have.
Yeah, I think that is important. Just being able to master your skill set of what you have, and being able to implement that, within your business. And I think a lot of times with syndications, that's one thing that you're having to do is really figure out, what value add can I bring into this deal? What resources can I actually implement? And, I want to kind of just get your thoughts on when you were able to actually land your first mobile home syndication that was in Iowa. What were like some of the things that you had to do, or what was the value that you provided in the syndication? I can only imagine construction might have been maybe one element, but it's probably a lot of others. But what were some of the things, what was your value add that you actually put into that deal initially when you got that started?
Yeah, so the Iowa deal was a wholesale transaction. So I just basically paired the seller and the buyer up, and the buyer paid me out a fee for doing so. My first syndication, it was in Kansas, and I basically located the deal and connected with a partner. And so within syndication, there's so many different pieces of the completion of a syndication transaction that you could get involved in various different portions of it. So you've got the portion that the deal is one piece. A person, without bringing the deal, without a real estate piece of property to be able to purchase, there wouldn't be any syndication to complete. There wouldn't be a transaction to complete. And without capital, capital is another piece of the syndication portion that it takes to be able to complete a syndication. So you have to have the deal, you have to have capital, you have to have cash to be able to close the deal. And then you also have to have a boots on the ground person, a person that's strategically located close to the area in which the property is located, so that once you buy the property, then you can maintain the property. You can manage the property management company to ensure that your investors that gave you the cash to be able to purchase the property, to ensure that the property would be properly maintained, that the business plan would be executed on time, and that everything would be in a quality manner. And so there's a few different pieces of a syndication that a person would need to be able to complete, and there's different portions that individual can bring to the table. So if you have cash, if you have plenty of capital, you could bring money to the deal. If you have a deal, you could bring the deal. If you're strategically located in a area where the property is going to be purchased at, and you can manage the property, that could be your portion of the deal. You just have to find out what it is that you have to bring to a team, and you could get involved in that. And so the Kansas deal, I brought the deal, and then even within my second syndication, which was in Johnson City, Tennessee, I brought the deal also on that. And so I underwrote the deal, I had it under contract, and then I basically put the team together to actually close the deal.
Yeah, that's solid. Yeah, I really like that. And I wonder, also, what is what makes a great deal as far as within syndications? Like, what are some things that you typically look for when you are eyeing on a possible opportunity that you actually want to put, a bid in for?
So for me personally, with the market being where it is today, we're looking at February 5th, 2023. Interest rates are pretty high, and we're not 100% sure exactly if the Fed are going to continue to bump the interest rates. So for our team, we're looking for great markets, markets where there are significant growth as far as like an influx of people moving into the area. There's a diverse job economy instead of just basically one major employer in the area. We want several different sectors. We love hospital. We love education. We love farming. We love just various different markets. It can even be technology in there. But as long as it has a robust growing economy, we would target that area. And so that's pretty much what we're looking to do. And of course, we want to make sure that our numbers, our metrics are being hit. Our cash on cash return is going to be able to be achieved. And also our IRR number is going to be able to be achieved as well.
Yeah, that's good. And kind of speaking on like the cash on cash return and also like the RI, like what are numbers that you usually look for, like for someone that wants to get into this space, that wants to kind of make sure that the numbers make sense? Like what would you say is a good cash on cash return for a lot of the different, whether it's mobile home parks? I know it could probably vary in any particular, real estate that you're looking in. But general, what's like a good rule of thumb of what people should look for on that, probably like a cash on cash return?
So from what I'm seeing as of right now, 7% on a cash on cash return is what most investors are looking for as of right now. They're depending on what the market does. We just aren't 100% sure if we're going to be able to get back up to an 8% return, cash on cash return. I know last year around this time, we were underwriting deals and 8% cash on cash returns was what investors was pretty much looking for. But we all know that the Fed had began to increase the interest rates. And so investors are having to do a little bit of shifting as well, but 7% as of right now, that's pretty much the go-to number. And as far as a IRR number, we're looking at a 14% return as of right now.
Okay. Yeah, that's good. And I think you are right, with the Federal Reserve just kind of stating that, they've recently raised interest rates by 25 basis points. So right now, the federal funds rate is about a 4.5% to 4.75%. So it's starting to get closer to 5%. A lot of people could kind of have been speculating that, the bond market is almost already pricing in that they won't go past 5%. So I can definitely see like what you're saying, man. It's really, kind of uncertain now as far as if they're going to go past that point or exactly what the housing market, how it could be impacted by interest rates. And I actually wanted to just get your thoughts on that as far as the things that you're seeing within your industry, with it being more tightening with our economic environment and seeing, interest rates, have been a little bit higher than they have been years prior. Are you seeing that, deals are still getting done? Are they becoming more expensive? What are some things you're kind of seeing just on the ground with just talking with people that are actually having to make these decisions on actually purchasing these properties?
So on the multifamily side, things are starting to tighten. So I'd say back around May of last year, things start tightening up and investors started sitting on the sidelines. There was a ton of guys that made their minds up that they was gonna basically wait things out and just try to see exactly what was gonna take place. So I am seeing some deal flow. I am seeing some individuals, some operators, syndicators, active syndicators doing some deals, but it's nowhere even close to the volume that was taking place at this same time last year. So, people are kind of on the fence. I have colleagues that are basically telling me to hold off for the next 6 months and let things just kind of settle and see exactly where things are. But I want to stay in the market. I want to stay kicking the tires because I know that there are some gems out there. And if you just completely drop off the grid and not do any lead generating, you could potentially miss out on a phenomenal deal. So I think there are some deals, but right now there's somewhat of a disconnect between buyers and sellers. So sellers are still under the impression that their properties are valued at 2022 prices, and it's just a different environment here. And so with interest rates going up, there's an adjustment that's gonna have to occur in order for the numbers to make sense. So I'm thinking sellers are gonna have to kind of come to a place where they realize that they're gonna have to ease the prices a little bit and adjust. But I can see exactly where they're coming from. Like last year, it was so difficult to get a deal done because there was so much money in the space that it was bidding wars. Whenever a property came to market, it was just going to be an all out bidding war, and the price that it was listed at, it was going to be bid up well above that. And so these sellers are grappling and having to come to terms with that it's a different environment here. So they don't have a huge surplus of buyers that's waiting to purchase their properties any longer.
Yeah, no, that's a good point, man. And I honestly was doing some reading of how it was really just talking about more, with people buying, whether it's single family or a multifamily, it's more of a standstill. Buyers are, being a little bit more hesitant because they want to see, if interest rates are going to come down, even though, I think historically, when you look at what mortgage rates have been with just like a 30-year fixed mortgage, right now we're only sitting around somewhere around 7%. But back in like the 1980s, it was actually closer to 18%. So I don't think really the interest rate conversation, I understand it's becoming more expensive for people to put those down payments on, whether it's an investment property or a single family property. I still think, like what me and you've talked about before, real estate is a hard asset that stands the test of time. It's a store of value. And can you kind of really speak to that as far as why, even though we're in this moment right now where there is a lot of recessionary pressures, we most likely, from looking at the economic data, we either already in a recession or moving towards one. Why would you encourage someone to still want to learn about real estate and starting to get their feet wet in the industry and try to start to build a base when it comes to investing?
Yeah, so real estate is an industry that has produced returns since it's been in existence. So it's a hard asset, like you said. They're not making any more dirt. I heard that saying and it made so much sense. And whenever something is in a limited supply, it becomes more valuable over time. And that explains why real estate continually appreciates over time. It's just a limited supply. And so, it's been returning. It's been creating wealth all throughout the years. Even in the 80s, as you just spoke about, they were making significant amounts of cash in the 80s when the interest rates were in the teens. And so we're not even close to that. I really don't think we're going to see that in this, definitely. But if they were able to capitalize on those kind of terms and those kind of interest rates back then, it's definitely still a great time to buy. And, you do yourself a great you'll help yourself significantly if you jump in and start investing in real estate.
Yeah, no, I agree. I think if anything, it gives buyers more time to make a decision on a property. Whether you're looking at a syndication or, wanting to get, a multifamily duplex, I think like what you mentioned in 2020, 2021, and even probably the first half of last year, it was so much competition where now it's almost good to see that the Fed is tightening the market because we need things to normalize. We want things to come down to somewhat of just more stability, come more to a floor price where things are not so inflated. And I think that's a reason why the situation we're in now, because of a lot of money that the Federal Reserve has printed, a lot of different government spending policies that came out of the pandemic, it has created more stimulus into the economy where we had a lot of asset inflation, which caused housing prices to skyrocket, and stock and bond prices have increased tremendously as well. I would love to want to get your thoughts on, from a seller standpoint. I think we're in a situation where I've been reading how inventory right now, and I don't know if this is the case in the syndication world, but as far as just simply supply within the housing market, it's almost been stagnant because you're having people that don't want to sell their homes because they're in a situation where, do I want to risk selling my property where I had a locked in mortgage rate of 3 to 4%, the risk buying the next property in the market that's going to be 7%? You're talking about a 3 or 4% increase on what your fixed mortgage will be. What would you say as far as, do you think that that's a big challenge with what we're seeing as far as on the supply equation within the housing market, how there's more homes being listed longer on the market, and then the second aspect being how people are not wanting to sell their homes because they realize the cost of capital is much more expensive within the market?
Yeah, so I think that's gonna be a major issue for until we get a little bit more stable. And from what I'm understanding and hearing is that the Fed is gonna bump things a couple more times or a few more times. I'm not 100% sure. I don't really think anyone can be, but after the bumps and the increases cease, it's going to hold and just try to get that inflation down to where they really want to see it at that point. And so, that can cause a lot of uncertainty. And if sellers are not real sure as to what's going to take place, then that will cause people to either hold and stay within their properties because they know they have the best thing going at that point. They know they have this for sure interest rate. I think that's gonna pretty much be the case with most individuals within the multifamily arena and within the syndication arena. Most sellers are kind of holding unless they're forced to have to sell. So within the syndication and the real estate front, some individuals, they got themselves in upside down on some loans and they were way too aggressive with their underwriting because we have had some really great interest rates and we've had some really great rent growth and some appreciation within the real estate world. And a lot of people didn't stay conservative and they got way too aggressive with their price points. And now they're finding themselves with the market tightening up, they're in trouble. And so some people are forced to sell, and that's a bad thing. And so, even on the single family front, if we are in a recession and companies begin to lay off, then that's gonna trigger some homes becoming available because of foreclosure, because of layoffs. And so you'll find some properties within the marketplace because of that. But other than that, I think sellers are gonna kind of stay on the fence, hold what they have until they can know things are a lot more stable, and then they can make a solid decision from there.
Yeah, no, that's a great point. And I think, one thing that I do want to share my screen is You talked about, how people got themselves in situations where they might have was, over leveraged, putting themselves buying something that they necessarily couldn't afford. And I've been reading and listening to a lot of different commentary that has talked about how whenever you are investing in the real estate, you have to invest in the standpoint of, okay, if interest rates do change, or if, typically on a fixed mortgage, you'll be fine. You'll have that locked in, but you always have to do proper risk management to know, okay, what is the worst case scenario in this situation? If, you don't want to overpay for something. You always want to try to find it at a discount. And when you talked about how a lot of people, their debt to equity, ratio completely changes, that's what a lot of people have been talking about right now, as far as us being possibly in a household equity bubble. And it's really showing, this red line is talking more about the total households equity that they have in real estate. And it's somewhere near 30 trillion, as you can kind of see on the left-hand side. But then if you look at that black line, which is the total mortgage debt, it's somewhere, right above, 10 or 11 trillion. And I say all that to say is, when we start talking about, recessions, I think it's very important to always have a conservative mindset. You can still take risks, but I think there also has to be proper risk management, because you have people that probably, bought these homes at a top, in 2020 and 2021, where they might have did a variable, fixed rate, and now they can't even afford their mortgage. And I think that's the challenging part, of real estate, is you got to really know what you're getting yourself into. And I want to kind of get your viewpoint on what are the things you do from a risk management standpoint when you are looking for, a syndication deal. How do you and your investors and your partners really protect your downside? Because I think that's going to be a very important conversation here in the future, just making sure that people are protecting themselves and having proper risk management. So what would you say are some of your thoughts, on that?
Yeah, so conservative is always the key. You have to stay conservative with everything that you're doing. And the best way to hedge that and stay conservative is get into strong, solid markets. So I mentioned that earlier, but if you get into a market that we find ourselves in a correction and people begin to migrate out, or companies begin to close, they start laying people off, that can impact you within your investment. You lose tenants because they no longer have jobs. They have to migrate somewhere else to find another job. So the market is so key. And then also you want to use historical data instead of all this inflated and 2 to 3 years of information. You want to go back over a long body and a long history of numbers so that you can see exactly how the market has performed over a long period of time rather than a short 2 to 3 year stretch. So such as rent growth. There's places within the nation that has seen double-digit increases rather than going with the traditional 3% rent growth model and building that into your spreadsheet. Some guys, they got a little bit too aggressive to try to make the numbers work, and they was building within their underwriting that they were going to be able to see 6% and 8%, 10% rent growth, and that is a recipe for disaster. So if you're not able to hit those projections, then that means that you're gonna come up short within your underwriting and within your business plan. You're not gonna be able to hit those numbers within your NOI, which is going to really impact you, and it's also going to impact your investors. And if it impacts your investors, it's going to impact you because you're going to have a stain besides your name, and that's the number one thing for a syndicator. You have to protect your investors, and in turn, you have to protect yourself, because you don't want to be known as a person that can't perform, or you project things but you're not able to attain them.
Yeah, that's very important. I think what you said about that time horizon, and making sure that you're looking at historical data over a long, time horizon. That's how I look at it with investing. Just like with stocks, whichever asset class, you gotta have an idea of what time horizon you're looking at to really get a full spectrum of, on a particular investment. Now, I wonder, with your deals, are you both a limited and a general partner?
So yes, I am a limited and a general partner on the Tennessee deal. So the Kansas deal, I'm just 100% GP on that. But I brought capital to the Tennessee deal, and I also got a portion of the GP. And so, yes, sir. Yep, definitely.
Yeah. No, that's good. And I wanted to see if you could talk a little bit more on just how you were able. I know with limited partners, sometimes they are only responsible for the capital that they put into the deal. General partner tends to have a little bit more, just they have more responsibility. They tend to actually run a majority of the syndication. Talk about the challenges with that as far as, some of the things you've learned as a limited partner and taking on that additional responsibility as a general partner of some of your other deals. Can you kind of talk on that a little bit, some of the things you've learned between those two different various responsibilities?
So the LPs, they they kind of have it made. They can just write the checks, and of course they want to vet the person that they're writing the check to. And so I don't want to shortchange any limited person, any individual that is a limited partner within the syndication, because you do have to do your homework on who it is that you're investing with. So you want to look at their track record. You want to see what kind of person they are. Are they credible? What are other people saying about them? Who's their team? Where's the market? Where's the deal located at? So they actually do have some homework that they have to do. But once they get into the deal, once they feel comfortable with writing the check, whether it's going to be 25,000, 50,000, 100,000, or $1 million check to become a limited partner, they pretty much are just cruising along the way, and they're able to receive updates as to how the property is performing. They can receive calls. They can connect with the GP team and find out exactly what's going on with the actual asset. But the general partners, they're the active individuals. So you've got the active and you've got the passive. LPs are passive. They are just writing a check. And the general partners, they're active. So the general partners, they're out making sure that the business plan is being executed, making sure that the property management company is performing, making sure that renovations are being made. All those things, that's found within the general partnership, and they take on a more active role within the syndication.
Yeah, that makes a lot of sense. And I think also, like, is as far as the things that you're doing just on a day-to-day basis with the syndications. I wonder, as far as how do you kind of determine as far as the locations that you want to go to? I know we've kind of talked about, for you, of course you're in the Kansas City area. But do you have any specific locations that you think about that you may want to kind of progress and be able to, eventually kind of grow just your brand and network of what you're doing? Do you have any specific locations that you kind of think about, that you're spotting?
Yeah, so definitely I want to be within that Southeast. I have a strong partnership, a group, mastermind down in that Southeast network there in Florida and North Carolina. And so there's quite a few of us that we invest with one another. And so I definitely want to get down into the Carolinas, Atlanta market, also that central Florida area of Orlando, the Tampa area. So those are areas that really intrigue me. And reason being is because when you look at the exodus in which took place back in 2020, there was a lot of people leaving Midwest because of different things, political issues, unrest, all kind of different scenarios. A lot of that migration that was taking place in the Midwest, it was going either to Texas or to the Southeast, the Carolinas, Atlanta's, to the Florida markets. And so where the people are flocking to, that is a great place to kind of follow, because where the people are, they're going to be your tenant base, because typically they're going to be needing jobs, and the jobs that they're going to be receiving, they're going to be in that price point, in that demographic that's going to be renters. And so that's a phenomenal market for an investor that's going to be investing in either mobile home parks or either apartment complexes.
Yeah, that's good. I definitely think the great resignation when you had a lot of people moving from places like California to Texas, New York to Florida. It really just shows that people are going to go to the places where they may feel a better quality of life. It may be more tax advantages. A lot of those areas, no state or income tax. And I think a lot of the just political and the tax implications in some of those areas, a lot of people, wanted to move to more desirable areas. And I think we could probably be moving into a market where, there's, even if we have a recession, there's still going to be areas, like you said, along that, southeast area, whether you're looking at the Carolinas, Georgia, Florida, Texas, there's still going to be rent growth in certain areas. There's going to be more population growth. People are going to go to the areas where they feel they can have a better quality of living. And I think even if certain cities have, recessionary pressures, there's still going to be, other areas that do well in a recession. So that's why I think, kind of like everything you're saying, staying the course and still looking, doing the research, and not really just giving up on wanting to bid for deals. You could probably find, find a great opportunity in this type of market. So, yeah. But yeah, so I did also want to just get your thoughts, Eric, for someone that wants to get into syndication similar to what you've done so far. What would be kind of some advice or, recommendations you would say for them on maybe things that helped you get started or that can help them be able to get started?
So for me, it was 100% education. You have to do some research. You have to start jumping into books and really just go head over heels into education. And something that I also want to note is there's so much content on the internet now that, I paid for several coaching programs. I've been in maybe about 4 to 5 coaching programs, and they were all phenomenal. I will say that, because of the network and the connections that you're able to make. So if you're able to afford to be able to hire a coach, definitely look into that. But if that's not something that you're able to do at this point, because I'm just going to be completely honest with you, some of the coaching programs, they're pretty pricey. Some programs, they start at $10,000 and they can go up to $60,000 to get into those. And what I would say for that is, if you can afford that, I would recommend it, because it's the network that you're going to be connected to that's going to make it all the more wow. But on another foot is, if that's not where you are currently, because I was at that place at one point, I just couldn't afford it. I listened to so many podcasts. I listened to so many different people, but I wanted to get in, but I just couldn't afford to jump in. And I knew that when I would be able to have that kind of capital available to myself, that I was going to do it. But I was handicapped because of the barrier of entry, which was pretty expensive there. But until you hit that place, educate. There's so much free content on the internet, and I'll just let you know firsthand, you can get the same quality content on the internet that you can get on the inside of these programs. And a lot of people probably will frown at me saying that, but I want to be completely transparent with you. Find some really credible people and start binging their content, because what they're saying is pretty much what you're going to get on the inside after you've paid 10, 20, and maybe $60,000.
Yeah, man, that's a really good point. And I looked on your website and I seen you had got some mentorship from Rod Cliff. And I tend to listen to his podcast, A Lifetime Cash Flow in Real Estate, I believe is what it's called. But how did that mentorship happen? Was it something that you just reached out to him? I know he mentors a lot of people that have been very successful in the syndication space, but how did that connection, kind of come about?
Well, I've been following Rod pretty closely for maybe about 4 years. And I mean, I just love this content. I could tell that what he was saying was true because it was aligning with the other content creators or thought leaders. And, it seemed like a fit. He was speaking the language that I was speaking. He was all about giving. He was all about helping others along the way. And so I could kind of relate to him. And so that's kind of what led me towards Rod. But yeah, Rod's a great guy. That mentorship, it helped me significantly. And it's just a network. It's a group of people that I'm able to rub shoulders with now. And we're able to use one another's strengths to get some deals done. I think within the group, we're probably somewhere close to about 50,000 units that we have closed within the past 6 years.
That's really dope, man. What's the vision, for Moonlight? What are some things that you have on your mind for 2023 and beyond?
So my goal for 2023, as far as syndication, I want to close 200 units in apartments before the year's close out. And so that's the goal. That's what I'm looking for, whether it's in Kansas City or if it's in North Carolina, Atlanta, Orlando, Florida. That is the goal moving forward. So we'll see. I'm pushing towards that. I just walked a 110 unit not too long ago, and so I was able to see, and we may put an offer in on that. But also, I want to help other people. I was in a pretty dire situation at one point, and didn't have any knowledge and didn't really have too many resources to know how to get access to capital. And so it put me in a really difficult situation economically, and it challenged me to be able to provide for my family. And so I'm on a mission to help as many people as humanly possible become financially secure. And so financially secure, it means various different things to various different people. Financial security could be the ability to pay your bills. It could be the ability to increase your income. It could be the ability to have generational wealth. Whatever financial security means to you, it is a reality, and it's something that can be attained. I know within real estate syndication, it's not a get rich quick system, but you can get extremely wealthy over a long period of time that can become generational wealth that you could pass assets down to your children in the millions of dollars. And so I want to just share my knowledge, what I know and have learned along the way, and also really encourage side hustles, because there's a lot of individuals, they don't really capitalize on that with their spare time and being able to really use the knowledge base that they have, or even their ability to learn. So I want to share different ways to get to solid sources of information, because once you're able to weed out the noise and figure out who are the legitimate people from the people that you need to really avoid, once you lock in on who that person is or who those people are, you can pretty much aim for the stars, because if you take in their content, you could replicate what it is that they're telling you to do. And even if they're trying to get you into a coaching program, you really don't have to go into the coaching program. You could take notes. I've done deals before I was in coaching programs. The coaching programs just basically helped me out. They helped me structure it, but I was able to do deals before getting into those programs just off of really locking in on who the real people are that I should be following. And I just took notes. I consumed everything that I could, and I was just researching, educating. And you can do the exact same thing. You can get deals done. You can connect. You can network. You can rub shoulders with people. And so I just want to be able to help as many people out to cut down and shortcut that process for them. And so that's kind of what I'm working towards as well.
Yeah, that's powerful, man. I think financial security, generational wealth, being able to just break those generational curses. I think my channel is really designed to be able to help educate people and help to be able to bridge that wealth gap that we've seen for so long. Whether you look at other cultures, other ethnicities, I think it's time for us to be able to recognize who we are as a people, and realize that we have the potential to have financial freedom and that could change our family lives. And I think you're so right, man, about the side hustles. I tell everyone all the time that you can never depend, on one source of income. It's just like, if you're investing in real estate, it's better to have, multiple doors than just one door. Because if you only got one tenant that's paying you on a monthly basis, if something goes wrong, you lose your job, the tenant moves out, you're in a unpredictable situation where, you could really put yourself, in a situation where you can't even be able to maintain the mortgage. Whereas if you have multiple tenants, you have multiple streams of income, when you have multiple side hustles where that's allowing you more opportunities to invest and to save, that allows you to get on the other side where you can do more things and not really just so restrictive on one stream of income. So, we definitely need to do a follow-up where we just talk about, side hustles, financial security, financial literacy. I definitely want us to keep, this conversation going, because I think everything that you're doing with your brand, man, we need more of it, especially with people that look like us, that can be positive examples within our community. I think that's what this is all about for me, and I'm sure for yourself as well. But how can people connect with you, if they want to learn more about, getting involved with some of your GP, deals, the syndicated deals? How can they actually reach out and connect with you?
Yeah, Kevin. So there's a couple of different ways for the real estate, for the syndication. You can follow me at my website. It's moonlightcre.com. So just as it sounds, so moonlightcre.com. And if you are interested in the side hustles and just kind of learning more about these side hustles and how to actually apply them to your situation, you can follow me at ericlindsey.ml.com. So I love to help you out or connect with you. If you want to reach out to me, I love to connect and see if I could give you a little bit of help.
Yeah, that's good, Eric. And I will, everyone, I'll put Eric's information in the show notes so that way you can be able to connect with him. But Eric, I appreciate your time so much. I really enjoyed, this conversation, and I really thank you for your time, man.
Yeah, it's been my pleasure, Kevin. And I know we've been trying to get this taken care of for a while. It's been a pleasure meeting you, and I'm loving what you're doing, being able to give back to others, and just helping as many people as possible along the way as well.
Thank you so much, Eric. Well, I appreciate you all for watching and listening, and take care.